You walk into a bank branch, the same one you've walked into a dozen times before, and somewhere in a system you'll never see, a number assigned to your account quietly decides how this visit is going to go before you've even said a word. Banks don't announce their tiers. There's no sign on the wall telling you which category you fall into, no email explaining the rules. But the moment you cross certain invisible lines, everything shifts: the wait times, the tone of voice, the products you're offered, the products you're never told exist at all. Let's walk through every one of those thresholds, the ones banks know intimately and never actually explain. You're standing in line at the branch, a printed number in your hand, watching the digital display tick up one customer at a time while the hold music in your head plays its own version of the same loop. When you finally reach the counter, the teller processes your simple request quickly, professionally, already glancing toward the next number before you've finished saying thank you. That night, a forgotten subscription charges your account, dropping your balance into territory that makes your stomach tighten, and you call the support line, where the hold music loops the same 8 bars 3 separate times before a human voice finally answers. The representative reads from a script, polite but distant, clearly speaking to the 40th person today with the exact same problem you have. You ask about overdraft fees, and the explanation arrives in language that feels deliberately complicated, dense enough that you nod along without actually understanding the answer. Here's the truth. Banks never put in a brochure. At this level, you're not really a customer. You're a transaction, processed efficiently, but never personally, because the cost of giving you real attention exceeds whatever value the bank calculates you're currently worth. Your balance creeps above a number you've never quite maintained before, and you notice it almost by accident, refreshing the app out of habit rather than necessity. A small notification appears, an offer for a new savings account with a marginally better rate, the first proactive message your bank has ever sent you that wasn't a warning about insufficient funds. You call about an unrelated issue, and the hold time is shorter than you remember, not dramatically, just enough that you notice the difference without fully understanding why. At the branch, a teller you've seen before greets you by glancing at the screen first, then saying your name, a small gesture that feels oddly significant given how invisible you felt the previous visit. A friend mentions she's trying to build credit too, and for the first time, banking becomes something you can discuss without feeling like you're confessing a failure. The deeper truth surfacing here is one banks never explain directly. Your tier isn't determined by your character or your effort. It's determined entirely by a number, and that number just quietly nudged you into a slightly different category of customer worth slightly more attention. You apply for your first real credit card with actual rewards attached, and the approval arrives faster than you expected. No waiting period, no follow-up questions about your income. A representative calls, not because you reached out, but because an automated system flagged your account for a credit line increase review, language you've never heard directed at you before. At the branch, the wait feels different, not because the line is shorter, but because when you do reach the counter, the conversation lingers a beat longer than necessary, the teller asking if there's anything else, instead of immediately calling the next number. You notice your card no longer hesitates at checkout. That small half-second delay you used to brace for simply isn't there anymore. A coworker, hearing about your new card, asks for advice on building credit himself, and you realize, with quiet surprise, that you've become a small source of financial credibility to someone who barely noticed you a year ago. The uncomfortable truth surfacing here is one banks rarely admit. Approval has very little to do with trust in you specifically, and everything to do with risk calculations that simply shifted in your favor the moment your numbers crossed an internal line. You're sitting across from a loan officer applying for a mortgage, and her posture shifts the moment she pulls up your file, leaning forward instead of back, speaking in terms of what we can structure for you instead of simply listing requirements. The appointment that used to feel like an interrogation now feels closer to a negotiation. 2 people working toward the same outcome instead of one person evaluating another. At home, you receive a letter, an actual physical letter, informing you that you now qualify for a preferred banking tier, complete with a phone number that bypasses the general queue entirely. You call that number once, almost as a test, and a human voice answers in under 30 seconds. No hold music, no script, just a calm, direct conversation. A relative jokes that you're becoming one of those bank people now. A comment that's meant as teasing but carries a small undertone of distance, as if you've started speaking a language they no longer follow. Here's the hidden rule revealing itself at this level. Banks have an entire tier of service running parallel to the one most people experience, and you only discover it exists the moment you accidentally qualify for it. You receive a call unprompted from someone identifying themselves as your personal banker, a title you didn't know existed until this exact phone call. She mentioned she noticed some activity in your account and wanted to check in, a phrase that feels oddly intimate coming from someone you've never actually met in person. At the branch, you're guided, without asking, toward a different section entirely, away from the regular teller line, into a quieter area with actual chairs and a small bowl of mints on the table. A teller who used to process your transactions now greets you, almost sheepishly, explaining that accounts like yours get routed to a different department now, a sentence that makes you realize, for the first time, that banks sort customers in ways they never publicly admit to. A friend mentions needing help understanding a fee on his statement, and you realize you genuinely don't remember the last time you paid a fee at all, the rules apparently having quietly changed underneath you without any announcement. The deeper truth surfacing here is one banks never put in writing. Fees aren't really a policy, they're a filter, designed to extract maximum value from customers without enough leverage to ask for them to be waived. You're offered a wealth management consultation, a phrase mailed to you directly, despite never requesting any such thing, an invitation that confirms some internal system has just reclassified you into an entirely different category of client. At the meeting, the advisor speaks in terms of portfolio diversification and tax-efficient structuring, language that didn't exist in your relationship with this bank a few years earlier. You mention almost testing the reaction, a minor complaint about a fee, and it's waived on the spot instantly without explanation, a level of flexibility you didn't know was available to anyone. At a family gathering, an older relative who once helped you open your very first account now asks, somewhat sheepishly, what bank you're using these days, the dynamic between advisor and advised quietly reversing itself. The uncomfortable truth crystallizing here is one rarely explained directly. Banks don't actually treat wealthy clients better because they like them more. They treat them better because the lifetime value calculation finally tips in favor of investing real effort into keeping you. You discover, almost by accident, that there's an entire floor of your bank's main branch you've never been to, accessible by a separate elevator, reserved for clients in a category nobody ever announced existed until you accidentally crossed into it. The first time you're escorted there, the receptionist already knows your name before you say it, the file on her screen apparently flagged well before your arrival. Your private banker mentions products in passing, structured investment vehicles, specialized credit lines, language so unfamiliar you realize entire categories of financial tools exist that were simply never marketed to you before this moment. A friend asks what bank you use, and when you mention it, he says, somewhat puzzled, that he's a customer too, completely unaware that the institution he knows and the one you're now experiencing operate as two almost entirely separate worlds. The hidden rule revealing itself here is the most uncomfortable one yet. The financial system was never one system at all. It was always two, running in parallel, and the only way to know the second one exists is to accidentally qualify for it. Your private banker calls personally to discuss estate planning structures, a phrase that makes you pause, the conversation no longer about growing money, but protecting it across generations you haven't even thought about yet. At a meeting, a lawyer joins by video call, casually mentioning trust structures available at your level, confirming an entire industry exists solely to serve people who've crossed thresholds most customers never even learn are there. You receive an invitation to an event hosted by the bank itself, dinner, a guest speaker, an evening clearly designed to make you feel like a partner in the institution rather than simply a customer of it. A relative going through a financial difficulty calls, not your bank for advice, but you directly, treating your relationship with money as something worth consulting simply because of what your access now represents. The deeper truth surfacing here is one bank's count on you never fully realizing. The moment you stop needing them, they finally start treating you the way they always advertise treating everyone. You're sitting in a private room with your banker, discussing a complex transaction, and you notice there's no clock visible anywhere, no hold music, no queue number, just a quiet conversation between two people who both already assume the outcome will be handled correctly. He mentions a strategy typically reserved for ultra-high net worth clients, a category you didn't know had its own separate definition until hearing it applied to you directly. A reporter, somehow aware of a transaction you were involved in, requests comment, and you realize your financial decisions have started generating a level of visibility that feels disproportionate to how ordinary the decision actually felt to you. At home, an old acquaintance, hearing about your bank relationship secondhand, treats you with a sudden warmth that feels less like friendship and more like proximity seeking, a distinction you've become uncomfortably skilled at noticing. The lonely truth crystallizing here is one banks never explain because it isn't really about banking at all. The more access you're given, the harder it becomes to tell who actually values you versus who values the door you might open for them. You're standing in a regular branch lobby, one you haven't visited in years, when you notice someone holding a printed number, watching the display tick upward with the exact same quiet patience you remember having yourself, long before any of this. You don't approach immediately. You just watch, recognizing the posture completely, the slight tension in someone waiting for a system that has no particular reason to notice them yet. When the teller calls them up and processes their simple request quickly, professionally, glancing toward the next number before they've finished, you feel the entire arc of everything you've experienced settle into focus. Banks were never hiding kindness from people without money. They were simply allocating attention according to a calculation that has nothing to do with character and everything to do with projected value. A system so quiet most people never even realize they're being measured by it. The tears were always real. The hidden floors were always there. The only thing that ever actually changed, level after level, wasn't how the bank felt about you. It was simply which number out of millions you happened to currently represent to a system that was never built to see you as anything else.